All right, YouTube. Welcome to my YouTube channel, Smart Money Rich. Glad to be here today to teach you about imbalance. That's what I'll be teaching you guys today. And these are the 5 things that I'll be teaching you guys about imbalances today. If you've always been confused about what imbalances are, then this video is for you. And here is the 5 things that I'll be teaching you guys today about imbalances. Now, I'll be teaching you guys the causes of imbalances, what actually causes those imbalances, those fair value gap, FVG, or inefficiencies that you guys always see often in the market. And I'll be teaching you guys about the uses of imbalances, meaning how to use imbalances, how to spot valid imbalances. And thirdly, I'll be teaching you guys how to spot valid imbalances within the market. And the 5th one here is this: I'll be teaching you guys areas to spot high probability imbalances, which means today's video is going to be all about imbalances. So some people call it FVG, which is fair value gap, while some other people call it inefficiency, but I love calling it imbalances. All of these terms actually mean the same thing. So if you guys have actually been willing or really looking for a video that really breaks down and explain imbalances in a simplified way you need to understand, then this video is for you. Like I told you guys, we are going to be talking about market inefficiency, which some other people call imbalances, and some people call it the fair value gap. Before we proceed with market inefficiency, you can call it imbalance or fair value gap, one thing you need to understand is that all of these 3 terms right here on the screen really don't matter whatever you might call it. The most important thing here is for you to know what they are, how to use it, and what are the causes of it. And that's what we'll be talking about today. It doesn't matter, the names does not really matter, guys. So like I told you guys, we are going to be talking about 5 topics. We are going to be touchlighting 5 topics today, which is going to be number 1. It's going to be number 1. We are going to be talking about causes of imbalance, right? We need to know what causes imbalances in the market, causes of imbalances, right? Now, let's talk about the causes of imbalance. The major cause of imbalance, right, is simply due to the aggressive buying and selling that occurs in the market at some point. Now, if you guys, let's use an example of a news, right? Mostly these things happen during news releases. That's the time you see huge imbalances being created in the market. Now, these imbalances simply represents the aggressive buying or selling of market participants, and those who causes these market imbalances, inefficiencies, or fair value gap are most times the commercial banks, the big boys, the smart money traders, the hedge funds, the brokers. These are the smart money traders. The smart money traders, whenever they enter a buy or a sell, it causes aggressive movement in the market. And those aggressive movements is what always leaves behind what we call imbalance, fair value gap, or inefficiency. Those are the major things that causes imbalances. Now, one thing you need to understand about the market is that the market moves in two ways. We have the efficient market and we also have the inefficient market, meaning that market moves efficiently and inefficiently. Now, the market has been programmed to do three things, and those three things I'm going to tell you how this forex market, crypto market, indices and all of this, because smart money, you can actually trade them on all of these various assets. So this is how the market has been programmed after my years of testing the smart money concept, and how imbalances can be used is what I'm going to show you guys today. So right now, guys, let's dive onto the major thing we have here, right? Let's go on, right? An efficient market, on the other hand, is one which the wicks do not have a gap between them and actually meet. That's when we are talking about a market that has already been efficient, a market that has already been balanced, that has no imbalance, right? The wicks might have reached themselves. Now, you don't need to worry yourself about the write-ups. I'm going to read this to your perfect understanding, and I'm going to show you examples of these things on the charts. I will show you the examples on the chart. I will show you examples on how I use imbalances for my entries. I'm going to show you all this thing. All what you need to do is stay till the end. You are actually going to learn a lot. All these years I've been putting together this imbalance market, because imbalance is something that a lot of people don't talk about. So I decided to put down the biggest topic today for you guys. So just sit, relax, and enjoy this video. And while you do so, make sure, my guy, make sure you go to the link below, click on the subscribe button, like this video, turn on the notification bell for more videos like this in the future. And also remember, I have a free Telegram community where I post my chart analysis, and I also send free signals every day. Make sure you join the Telegram. The link is below. I also have an Instagram account. You can follow me at Smart Money Rich, and make sure to subscribe to this YouTube video. Let's go, guys. Let's go. An imbalance zone is a specific area on the trading chart where the price has moved sharply, creating a gap known as fair value gap. I said all of them matters, right? They are the same thing. Remember, fair value, imbalance, they are the same thing. Blah, 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 whatsoever you call it. Just know how to use it. That's all. A market imbalance occurs when there is an overwhelming interest from the buyers, which is we easily call the buy side liquidity, or sellers, which we call not the buy side liquidity, is the buy side imbalance, right? Which is a bullish imbalance. Remember, we have a bullish imbalance, we also have a bearish imbalance. So guys, an imbalance zone is a specific area on the trading chart where the price has moved sharply, creating a gap known as fair value gap. A market imbalance occurs when there is an overwhelming interest from buyers, which we can call the bullish imbalance, or you call it buy side imbalance, or sellers, which we call the sell side imbalance or the bearish imbalance. Now, without enough opposite side orders to match, this scenario typically reflects the strength of the market participants, right? This always reflects the strength of the market participants at that moment, right? Consensus about the asset's future direction. Let's say when there is news release, you always see that sharp spike to the downside, and during news release, you always notice that the market will always move sharp to the other side before it continues to the upside. Now, this is a battle between the sellers and the buyers, and this sharp movement that occurs in the market that causes imbalances simply tells you who is stronger than who, and it simply tells you who is having the highest strength, which simply means the people that are putting in the plenty orders, those that are selling, aggressive sellers will leave aggressive imbalances. Aggressive buyers will leave aggressive imbalances. So let's continue, guys. To avoid any misunderstandings, before I explain what it is, I want to highlight the many terminologies that you could be familiar with. I've said it before: fair value gaps, FVG, and imbalances. These are what people call it. All of these terms refer to the same idea, although traders use different words to describe it. To put it simply, market inefficiency, right? To put it simply, market inefficiency occurs when the wicks are separated by a distance or a gap and they don't meet. An efficient market, on the other hand, is one in which the wicks do not have a gap between them and actually meet. I understand that this may throw you off the boat a little, but don't worry, my guy. I will show you some textbook and chart examples so you can really understand what Smart Money Rich is talking about. So let's go on to the chart, guys. Let's go on to the chart. Let's go on to the chart right now. So right here we are on the chart, right? Now, how to spot imbalance, right? How to spot imbalance. That's what we'll be talking about right now. How to spot imbalance. Now, if you see what's on my chart right now, you will see that I have candle 1 right here. This is candle 1 right there, so I'm gonna call it just 1 to the right. Good. And then I'll call this candle 2, right? I'll call this candle 2. Guys, you need to be patient with me. I'm giving you gems, something that's going to last for ages. This video is going to last for ages. You understand? Remember to subscribe, like, comment below. Right, let's go. So I'm going to call this candle 2. So I will just put 2, leave it there, and I'll call this one the third candle. So these are mainly the candles that really matters, right? These are the candles that really matter. So now let's spot out where the imbalance is and where the imbalance is not. So here it is, a textbook example, not a chart example. You see candle 1 right here. So let's say, for example, this is a bearish move, right? The market is bearish right here. The market is going down, right? And this is the first candle. You notice that this is the candle wick low right here, and this is this third candle's high. You see? Now you see that this candle, this very candle right here, did not touch this one. It did not, right? It ended here. Now, for the fact that this candle did not pull up to touch themselves, it simply means that there is an imbalance between this market area. Now, noticing that there is an imbalance, you simply need to understand that there's a high probability for the market to trade and then fill up the imbalance. We are going to use this guy as an example of another block, or you can say supply zone. Yeah, then the market then simply continues to the downside, because the market has been programmed to do 3 things. You need to understand that the forex chart, the forex market, the forex history has been programmed to do three things, right? The first thing is to liquidate. The second thing is to do what, right? The second thing is to rebalance price, and the third thing is to mitigate. Liquidate, rebalance, and then mitigate. I'm going to teach you guys how all these things occur often in the market. So let's go. Now you see this for the efficient market, or for the price that has already been balanced, right? When we say the market has already been balanced, this is what I simply mean. You see this weak low right here and this weak high, they've actually tapped into themselves. There is no imbalance between 1, 2, and 3, but there's an imbalance here between this candle and this candle. This open gap right here is an imbalance. So this is how to spot imbalances on your chart. Now this is a textbook example. I'm going to take you guys right now to the chart, and that will be on how to spot valid imbalance, right? How to spot valid imbalance, and also areas to find. What we are going to talk about right now is how to spot valid imbalances and areas to get the high probability imbalance. Now, one thing, you guys, let's use this chart for example, right? Let's use this chart for example, right? So now guys, here we are on the chart. We want to do some chart examples, and this chart examples is going to be on the uses of imbalances, right? The uses of imbalances, and how to use imbalances, areas to find high probability imbalances, right? So now, if you guys can see, you can see what we have here. You can see that I'm using gold chart for example. Now you see what we have on gold. We've been having an up movement, right? The market has been trending up, giving us a break of structure, and right here we consolidated a little. Now this consolidation could have caused the market to crash, right? If the sellers should be stronger than the buyers. But if the buyers should be stronger than the sellers, then we should see a drastic movement or a rapid movement to the upside. So right now, let's play price and see who is stronger in the market, because now for retail traders this is going to be maybe a resistance zone, but what I can see is that the market was bullish. It then decided to consolidate. This consolidation phase is an accumulation phase. Price is simply accumulating to either distribute or to reverse, or call it retracement. So let's start, guys. Now the chart is in replay. Let's put it on times 3, should be better. Okay, good. So we see an impulsive movement to the upside right now. That's you guys can see what we are seeing on the chart. We are seeing an aggressive movement. So when price is moving like this, price is moving aggressively, and this simply tells you that the smart money is in business at this very point. This is what the market is doing. The market is moving impulsively to the upside, causing imbalances. This simply means that the buyers are entering the market with huge amount of money, right? That's how you see the market impulsing to the upside in this kind of way. Now, if you look to the downside, you're going to see that there are a lot of candles that has not actually met themselves, right? Like this level down here. Let me mark out areas of imbalance. So we have this level of imbalance. I'm going to put that in green. There's an imbalance here. There is also an imbalance here. This is showing you the presence, how aggressive the buyers are. They are causing imbalances, and when these imbalances are occurring in the market like this, since the market has been programmed to always rebalance price whenever there's an imbalance in the market, this happens, or let's say the market has been programmed this way to always provide a fair value for both buyers and sellers. That's why if the buyers buys aggressively, the market finds a way automatically to rebalance price by filling up those imbalances or those fair value gap. And once this has been completed, right, the market will start to move the opposite direction. So let's continue with more examples, guys. So just stay tuned with me on the chart. You see how the market is moving drastically to the upside. Now what should I be expecting, since I know imbalances, right? What I'm expecting right now is that price at some point is going to retrace, is going to reverse to the downside, even if it will continue to the upside, to fill up all of this imbalance. Right now that I know that the imbalance to the downside is going to be filled up, what will I do? I'll look for an opportunity to take advantage of those market movement. Right, you guys can see how the market is shooting. You need to know that there is a huge amount of money that has entered the market at this point that is causing the market to move drastically to the upside. So I'm expecting price to shift lower, right? So that what happens? Fill up the imbalance. So you guys can see what has happened here, right? The market impulse to the downside, filling up what? Filling up all these open imbalances that was here. Why the market was impulsing to the downside to fill up all of this imbalances, it also left imbalances above. Now this is to tell you that all the smart money traders that were buying impulsively, they are now taking profit aggressively. They are taking their money out of the market drastically, aggressively. So the more they enter aggressively and they start pulling out the money from the market aggressively, it will now crash and it will now leave imbalance to the upside. And this also provide trades opportunity for people like me and you, if we are able to spot and know how to enter the imbalances level correctly. And that's what I'm going to teach you guys. That's what I'm already teaching you guys, don't it, guys? So make sure to like and comment, guys. Like and comment. Let's continue, right? So you guys can see that the market has dropped all the way down to fill all these imbalances. Now it was able to fill this imbalance before pushing up to go and fill the rest of the imbalance level. Now what you need to understand is this. Now I have seen the market needs to come to this level. I'm going to look for an opportunity to sell until all of this imbalance has been filled up. So what should I do? I need to identify an order block that left some imbalances behind. Those are going to be my entry level. So right now we are going to look out for this level right here. This level right here can be my entry point, right? That can be a nice entry point for me, because now there is an open imbalance right below here. So let's take it all the way up. You see, let's play price. There's an imbalance there, right? So let's play price. We play price now. Okay, I'm expecting price to fill up that open imbalance, right? So if that will be possible, that could have been my first entry. Price needs to trade to the upside to fill it up, because the market has been programmed to do three things, right? To liquidate, to rebalance, and to mitigate. So right now I'm expecting the market. Now what could we see? What can we see, guys? We can clearly see that the market has now done what? The market has now pulled up to go and fill the open imbalance that was here. After filling up that imbalance, it did what? It then mitigate this nice order block that was right here. Now since this imbalance has been filled, let's get it off the way, and then let's continue to play price and see what happens next. All right, so the market has mitigated. Since the market has mitigated, let's see what happens. So the market impulses to the downside aggressively and also leaves another order block. That could have been a second entry, right? Why am I entering off of those level? Because those level has what I call imbalance, right? Let's look at it. You can see that it also dropped massively to the downside, to the extent that it left an open imbalance. So this could have been my second entry. Now why would it be my second entry? Price definitely needs to pull up to go and fill up the imbalance and mitigate the supply and then continue to the downside. I'm expecting the price to continue to the downside until it finally fills all of this imbalance. Then that uptrend can continue, because that's how the market moves. So this could have been my second entry here. So let's play price and see how we use this thing. So you see the market is already filling up the imbalances, and here we go. Not to waste too much time, I'm going to be using like the 5 so it can be faster. Okay, now we fill half of the imbalance, right? We filled half of the imbalance. Now that we filled half of the, let me take it where we are having a little imbalance left, right? That we are expecting the market. Now see what happened there. That imbalance has been tapped. That imbalance has been filled. Immediately that imbalance was filled, what then do you see? Immediately that imbalance was filled, we had what? A mitigation. Before that mitigation, what happened? Now look at it. Before every mitigation, what will you see? You first see a liquidation. Price liquidated this high before that mitigation. What also happened here? Price also liquidated this high before that mitigation. So price has been programmed to do what? Liquidate, rebalance the imbalance, and then mitigate and move to the opposite direction. So let's continue, guys. I hope you guys are learning. If you are enjoying this video, you're also free to comment below the video and request for whatever video you might ask next. So the video you're watching right now is a video that someone like you as well requested for, right? In the comment section of my last video, someone requested for a video of imbalance, and then I promised to do so. So it is also your right. You can request for any video and then you will get it. Now let's continue, guys. What can you see? What you can clearly see is that we have what? An open imbalance right there. We have an open imbalance right here. So price finally liquidate all of these guys and mitigate this guy. After that mitigation, a new order block was seen, right? And this order block is sitting above an imbalance or market inefficiency. So what is my expectation, guys? Is the same thing. This can be my third entry, just the same thing. I'm expecting price to come and fill it up. So I'm expecting a what? Liquidation of this high, this candle here, the liquidation of that high, the rebalancing of price in this imbalance, the mitigation, and then the continuation. That is it, guys. So let's continue to play price. I hope you guys are enjoying this video. You know, make sure you always visit. Watching once is not going to do anything. You need to visit. Watch it as much as you can, digest it for yourself. It's all for you, right? So finally, guys, we've had this imbalance field, we can take it out, and our entry trigger, this other block, has now been mitigated. What do we have? Liquidation, rebalance, and then mitigation. So we expect price all the way to the downside. Now I'm still expecting price to come and fill this imbalance up, because this is how the market has been programmed to move, right? This is how the market has been programmed to move. So we expect price to always do more of this, right? More of this, right? We are always getting deeper push to the downside. Let me add it more. Always getting deeper push to the downside. And now there is a strong imbalance that has been created. So what do we see? This is an order block. It's always the last candle, right? And what do we have all down here? We all have an open imbalance. So that will be our fourth entry for price to go, rebalance it, and then move down. So what is our expectation right now? You should already know. You should already know. So this is how you want to spot imbalances that you'll be using for your entries. Look at all this imbalance has been created. Right now, this level, this low has been liquidated, and price is now trying to push up now. Some of the imbalance have been filled. So anyone that has been filled, let's take it out. You have been filled, half of you. Now we are remaining half, right? So we expect this imbalance to fill, right? This is our fourth entry. Is the same thing. Market should just retrace into this guy, but definitely there has to be levels of liquidity that price will first of all mitigate and liquidate. Like I told you, it will always liquidate, rebalance, mitigate, and then to the downside. That's how I always catch sniper entries. A lot of people wonder how I catch sniper entries. This strategy, right? It works on all asset class. It works on all asset class, currency pairs, gold, indices, cryptos. In my free Telegram community, you guys see I'm banging S&P, I'm banging NAS100, I'm banging US30, I'm banging crypto, Bitcoin, Binance, Ethereum. I'm banging all of them. I'm using this strategy. You understand? You just have to do this over time. It's not going to be you watch one video, you go and sleep, you learn. No, it's going to be a back-to-back thing, guys. It's going to be a back-to-back thing. You get? So see what we have here. We have some of the imbalances left, right? You can see this, all of this level has not been filled up. So price is still creating what to liquidate. Right now, what has price done? Price has finally liquidate the high. Look at it right here. It has been liquidated, right? And then we get a rebalance and then mitigation. This is how the market moves. So we will be expecting the market. Look at that huge imbalance that just dropped, right? That's huge. Remember, price is still trying to come and rebalance, right? Even if it is one pip, price will come. So this is another sweet entry, guys. This is another sweet entry right here. Just pick this imbalance here. You're entering from here, right? You're entering from here straight. This is the other block. Look at all of this open imbalance. What do you think price will do? Impulse to fill it up and continue to the downside. I'll show you guys how I use these things to trade. I'll show you guys, right? It's not as hard as other mentors teach it to be. It's just as easy as I'm teaching it. That's how I teach to my students in my Discord. That's why it takes them few months, 3 months, 6 months, 1 year. In fact, my students, before it used to take them 1 year. At some point, it started taking my students 6 months. Right now, it's taking my students 3 months. Everything is there in my Telegram. You can go and check. You understand? The more I simplify Forex trading, the more my students are benefiting from it. Because the more I learn and simplify it for myself, the more I go and teach them to make it easy and simple for them. So that is it. That is it, guys. Now, let me take you guys to my chart where I'll be showing you guys examples on it's going to be in my Discord, right? If you're not in my Discord, you're missing. Find your way in. You have to do it now. Knowledge is power, bro. Knowledge is power, bro. Right? So let's go all the way down and look at some of my entries that have taken over a period of time, right? Example number one is going to be this gold trade. Now there was a news, that's why I used news during the first time to give you guys an example, right? There was a news and I marked out this demand zone that if the news pushes down, it's going to leave an imbalance over here, and if it mitigates my zone, then I'm going to be entering. Now look at what happened there, guys. Look at what happened there. I don't really know how they used to do this one. No, let me go back. Let me just be annotating. Look at, you see this low. Price did what? When price impulsed into this demand, what did price do? Price first of all liquidate every level of this was a liquidity right here. Price first of all liquidate this level, right? And after that it rebalanced price and tapped into this demand zone. Immediately it tapped into this demand zone. That was when I called the signal for my community. This is it right here. You can see the signal. I sent it. I say buy XAUUSD now, and I gave them stop loss. Now look at what started going on, right? Immediately I called out the gold. Price started pulling up because I understand the concept of imbalance, right? Price started pulling up to go and do what? To go and rebalance price. I understand that once price is rebalanced, then we are going to dump it. You understand? We started stacking a position, entering the market until finally the market smashed TP. Immediately the market smashed TP. What should we now be expecting? We started looking out for the price to do what? To sell, to dump, and that was how we exited this market successfully, entering a sniper entry. Look at where we entered this market. This was a sniper entry. Stop loss was in a nice area, and we just take all this thing up here. And how many pip did we do? We did a lot. We smashed a lot. And then this trade here is on S&P, right? I send the signal on S&P. Looking at the market, what first of all will you see? You will see that the market impulsed from this level, broke above this high, leaving a open imbalance. What do we see here? We saw sell side liquidity. What do price love to do? Liquidate, rebalance, mitigate, and buy, right? This signal was sent into the community and we banged it, right? We banged it. It was crazy. Now look at this this trade I called also on Ethereum. I used imbalance for this trade on Ethereum. It was a swing trade call, right? If you look at the date, you will see the date. This was just few days back, January, right? I took this trade and this trade is still running, right? Now if you look at this Ethereum trade right here, you see that price left an open imbalance behind. Look at this imbalance was filled up. This level here was liquidated. Imagine immediately this liquidity was liquidated. What do I expect? I expected to see this imbalance rebalanced and demand tapped. Now for price to impulse to go and fill this imbalance, price must definitely start to do what? Buy aggressively. Remember, we need to see the aggressive buying, else the aggressive selling might continue. Now I use imbalances for entry. So what I'm going to teach you guys right now is how to use imbalances for your entries and how to use valid imbalances. So pay attention. Right now, if you look at this, now what I'm going to teach you guys right now is how to use imbalances for your entries and how to use imbalances for your exit, right? So follow me. Let's start with my chart right here. So right now, guys, you see that I'm going to start on Ethereum. You see this Ethereum trade. You see that we had an aggressive sell. It consolidated and more aggressive sell. Now price tried to rebalance it, but it could not fill it up. I know very well that price always or needs to trade and fill this level up. So what did I do? After this level was what? Was liquidated, I knew price will rebalance. After price rebalanced, I needed to see an aggressive movement to the upside. Immediately I spotted that aggressive movement to the upside that left an imbalance. I realized that, oh, this was where the smart money did business, and this is where the market is coming next. So immediately I saw this imbalance, I noticed that demand started kicking in. Demand number one impulsed to the upside, leaving an imbalance. It came back to fill it up. When it filled it up, it did not break the previous low. So that's a shift in market structure. After filling it up, it impulsed again, more than how it impulsed the first time, breaking above this high. So now I've seen two breaks of structure, 1, 2, and this imbalance up here needs to be refilled. That was when I called this trade for my guys, because I'm expecting it to come and fill this guy up and then continue to go up and fill this guy. So I'm going to enter off of this imbalance level here, this demand zone, this other block. Once price comes to fill it, I get in and I get out once price is done filling it at this level. Right now, let's see the trade, how it ran. The Ethereum trades that I called. Let's see how it played out. That's what I'm looking out for right now, and that's going to be this. You saw it up here. So I'm going to look for the chart for you. It was actually, should be here, the Ethereum, no, it should be in my Telegram. So guys, let's pull up to my Telegram right now. So you guys can always join my Telegram community, Smart Money Rich. This is my Telegram community. We have about 3,000. This community, I share a lot of free trades. So this is the Ethereum trade here. You see that immediately the level was tapped in, price started pulling up to go and fill up this open imbalance, and that was how we made money on it. You see, I sent it into this. So you have to join this, my free Telegram. The link will be below. The link will be in the below this video. So check below, you see a link into my free Telegram community. So this community, I share free trades, right? I share free signals. I send in my charts. I send signals every day, crypto indices, every signals I share in this community. So make sure to join, guys. Let's continue from my Discord. So again, another trade that I took on that same day, I think, look at the dates right here, was on Binance, right? Now, if you look at Binance, remember this signal was sent into my community and also the chart was sent. So my student will always see why I'm selling, why I'm buying, reasons I'm buying, reasons I'm selling. They will always see. And with my chart that they can see, they will be able to know my exact way of entry and exit. And they can, with them, start seeing me sending chart every day and then learning from my chart, they get better within months. You understand? So let's take a look at this. Now, you see that from this level, there was an aggressive push to the downside by sellers. Price gradually found its way to fill it up. Immediately, price filled it up. It started dropping, breaking below this low. Breaking below this low, this is a change of character for me. Now, I have a video coming on change of character immediately after this video drops. So if you want to see that video of change of character, drop a comment below, right? If I get over 200 comments on this video, the change of character video is dropping, how to use it. So now, after I spotted this change of character, what did my eye spot again? Imbalance. There's an imbalance here, there's an imbalance here. Price needs to do what? Refill it, right? And up here there is also an imbalance. With this aggressive movement to the downside, this is to tell me that the buyers are tired and the sellers are now active. So what do I have to do? Wait for price to liquidate this buy side liquidity, rebalance this imbalance, mitigate this demand, and sell all the way to the downside, filling up the imbalance. Now see what price did. Price came all the way down first to fill all these imbalances, mitigate this level before coming back up to fill this imbalance. This is to tell you that even if price sells 20,000 pips and there is an 1 pip imbalance that was left behind, the market has been programmed to go back and fill it up, no matter the journey. So if you are coming from Nigeria and you're going to London and you left an imbalance in Nigeria, my brother, you're coming back to Nigeria to fill that imbalance before heading back to London, right? So make sure you don't leave an imbalance behind. That's what the smart money, that's how they programmed the market. That's why this video is a video you need to wash and rewash. It was packaged for you. So guys, immediately that happened, price came back up to fill this open imbalance. Immediately it filled this open imbalance, we saw price start selling all the way to the downside. All these signals were sent to my community. This is it. We trade crypto, we trade forex, we trade indices, we trade everything using this same strategy. Now look at this setup on Bitcoin again. This signal was sent, a buy to sell, right? Now look at it. Price impulse to the upside, leaving an imbalance below. After this imbalance was left below, I knew that price is definitely going to come down to do what? To fill this imbalance up. So for that reason, I'm going to look for an opportunity to sell into this imbalance and I exit. This is how to use imbalance for your entry and exit, right? So this imbalance here is going to be my exit imbalance, and this one below this demand supply is going to be my entry. So when price impulse to the upside, there is a level of liquidity that price needs to liquidate already, and there is down here another level of liquidity that price also needs to do what? To liquidate. So right now the three things is complete: liquidation, rebalancing price, and what? Mitigation. So let's go, guys. Price is expected to fill this imbalance and then to the downside. So the signal was sent. This is it. I sent the sell limit order first before the buy limit order, because it was supposed to be a sell to buy. I'm selling to buy. So let's go, guys. If you actually see, you will see that at this point the price was active and it was running in profit until the take profit was smashed. So immediately the take profit was smashed, we were out of the trade, we were out of the market. You understand, guys? That's how we exited the market for price. You can see right now that this imbalance that was here has now been filled up. Now price has finally come into this level of demand, right? So what should we expect? There was imbalance left up here. Do you think price will leave this imbalance behind? So let's see if actually price was programmed to leave imbalances forever. Now see, this is what price is doing currently right now. So we have price pushing to the upside. We already have a high that price needs to liquidate. So this is what makes it high probability imbalance. Once that imbalance has a liquidity that needs to be liquidated, it is high valid imbalance. If there is no level of area that price is going to liquidate, then price is going to liquidate the up. It will take out your order block. What we can clearly see is that this order block right here has not been tested. So it can be an area, right? It can be an area of entry. Maybe there's an imbalance down here too. Maybe if you fuse this one, tap into this order block, it has already liquidated this low. Yeah, right? We've seen liquidation, we've seen rebalance, we can see mitigation, and it goes on again to do what? To do liquidate this high. This high here is liquidity. It needs to be liquidated, and this imbalance needs to be what? Rebalanced, and then we need to see a mitigation, and then we can sell. So that also can be our entry if we are going short, and our stop loss can just be above up there, and our target can still be maybe this low because it has imbalance also. But let's see how it plays out. These are just how I use them for my entry, guys. This is just how I use all of these stuffs for my entry. So let's actually pay attention and see how the market. Now the market failed to come and fill this level down here. You see it failed to come there, but it has gone up to even create more level of liquidity. Now it has made it a double top. So retail traders will be selling. Oh, price has finally come here. You see, price has finally come to this level to mitigate, and then it's now pulling up. You see, guys, this level has now been filled. Imbalance filled, level liquidated. What is price not going to come here? Let's wait and see. Price is supposed to come there because it has an imbalance, right? And it also have liquidity. So let me see why. Okay, maybe price decided to come and fill this other one. So now we have a mitigation. Okay, so what should we be expecting now? Okay, price can start to go up. There are imbalances then. What's going on? Okay, I can notice some aggressive movement, guys. Let's be patient. Most times you have to be really patient. Once you spot your levels, those are your entries. Look at the imbalance, look at the liquidity that needs to be swept, liquidation, rebalance, mitigation. You can see, right? So that's that. Let's pay solid attention to what happens here. Price is still not coming down. Price is still coming down but not going up. So you guys just need to know that this is how I use imbalance for my trade entry, right? Price will always trade back into an open imbalance, right? So you always have to have it at the back of your mind that imbalance needs to be used with market structure, supply and demand, right? You have to use it with supply and demand, right? Because if you're using another block that does not correspond, let's say, okay, because you see this aggressive move to the upside, you mark here as another block. Now price failed to respect it. Or let's say maybe as you see this other imbalance, you mark it out as another block. Price failed to respect it. You'll be wondering, why is price not respecting my zone? Why should price respect your zone when you're trading against the trend, my brother? Brother, why will you do like that? You have to trade with the trend. With the market structure, you see, price is now coming over here. Liquidation has now been taken. So we wait for imbalance. So this is how you get into your entries, right? This is how you get into your entry, and then you simply exit, right? This is it. Let's add more. How many times? Oh, 10 is the highest right now. All right, but we've been tapped in. What's left now? We expect price to sell off. There are some imbalances down here. You see, price starts selling and you're already in your market, right? Now, if you join my community, there is a lot for you to benefit right here. There is a lot for you to benefit in my community. Free signals, you learn from my setups, you learn from my entries. I show you the reason for my buy and sell. Now, if you come into the Forex community where my students and the rest of the professional traders like Snipes, FX King, all of them, Harmless, Big Champ, all of these guys, you understand, over 175 professional Forex traders. This is the same method everybody use, right? You see FX King right here. This is US oil, right? It waited for price to break the structure. He marked out his supply zone because there was an imbalance. Price liquidated, rebalanced, mitigate, and sold off. This is just how we trade, right? If you look at this entry from Snipes on USD card, you see how he actually sniped it, right? This is Snipe Scott FX, right? You see that this was on USD card 1 hour. You see that he waited for price to come, liquidate this level, fill the imbalance, tap into this 1 hour order block, and price started selling. You understand? This is just what we apply into our day-to-day trading, and this is how we make money. Look at this guy entry on Euro USD. He's waiting for price to come and liquidate this level, rebalance this imbalance, mitigate this demand, and then price starts to buy, right? This is what we do day in and day out. It is a simple method for trading. Okay, if you cannot afford my mentorship for now, you can simply join my free Telegram community. You understand? Join it. I still post things here for free. You understand? I still send signals here for free. All right, YouTube, that will be all on imbalances for today, guys. If you want to stay updated with my strategy, all you just have to do is check the link down below, join my Telegram community, stay in touch with me, follow my Instagram page at Smart Money Rich, subscribe to my YouTube channel, and join my free Telegram community to stay updated with me. And remember to drop a comment on this video. If there is an video you're expecting me to come up with in the future, drop it in the comment section and I will do exactly as you say. I will drop a video on any topic that you guys drop in the comment section. Make sure to share this video, this topic that we just talked about today, with your communities. Whatever community you belong to, share it to your friends, guys. You don't keep information to yourself. Make sure you share the information to go around. As many people can do these things, that's how our strategy will continue to kick in whenever we strive. Thank you for staying true. I'll see you guys again